Hi, everyone, and welcome to this month's edition of your Daily 5. I am your host, Mish Schneider. And as always, I like to cover a lot in a very short period of time. So I thought for today we would work on the theme of, is it back to work? Or is it work from home? And the best way to look at that is not so much what you hear about COVID and shutdowns and hospitalizations or anything like that. Really, it's the market. The market is always the smartest thing in terms of the price. And you're going to be surprised to see what we look at today, because it's going to very much show kind of the opposite of what you're hearing the media talk about. So let's go through some of the symbols here. I'm going to cover work from home is the ETF, and then a whole bunch of symbols that are either related or in that particular basket. So let's get started. Okay, so the first chart we're going to look at is the actual ETF called work from home. And so what's very interesting about this chart, by the way, is that you can see that we have come down in price from the highs, but yet at the same time, we also have a situation here where we're sitting right on the 50-day moving average. So as I'm talking to you, not only are we sitting on the 50-day moving average in price, but we are also in a situation where we're having an inside day. Now, this is a very interesting scenario, considering there are several countries, Austria, Australia, that are looking at shutdowns, while the United States, even though we are doing better, we're still really actually not that vaccinated, and there's a lot of chatter out there about whether or not people are going to be requested to go back to work or not, or whether they even want to. And of course, on top of that, we have a tremendous amount of people who have quit their jobs. So if we just look at this chart, there's some optimism in terms of going back to work, but at the same time, from a technical standpoint, this is also showing that as we get into the winter, that could easily pivot, and this could turn out to be a good buy. Now, if we take a look here on real motion, you can see the momentum. Real motion is down here. You can see the momentum has waned. The leadership against the SPY, of course, has really come down. And so I would keep an eye on a couple of things this next week. I know it's a short week with Thanksgiving, but if we can take out the high of Friday, which is 77.73, and we start to get closer to the 50-day moving average, then it's possible you have a very good low risk trade to under this low from Friday, 76.67. All right, if we move on from there, let's take a look at Zoom. Now, Zoom is a hot topic because it actually reports this week. And so right now, it's definitely lost momentum, although it's sitting still on the Bollinger Band, obviously lost leadership. And so with this one right now, you might have a mean reversion type trade, but I would at this point wait for the actual earnings. I would not do anything ahead of earnings on this. And if earnings report comes out well, we may be putting in a new 60+ day low. So that would be something to look at. Under 242.99 is support. And if it comes out very well, then we obviously could look at the 50-day moving average or a move over 268. On the flip side, if this actually does not do well in earnings, although I suspect that it might, I would be looking at around 230. Max pain would be down to 200 if it gets that far down. That, I think, would be a bargain for this particular stock. So either we're going to get a good big dip, and we'll see what happens if it dust settles and turns around with some kind of another mean reversion trade, or we get a rally and we clear that 50-day moving average. Next one is Netflix. Now, Netflix just shot up recently to new highs. Now has come off. It's also showing a lack of leadership here, and you can see the momentum wasn't nearly quite as exciting on this last high as it was when it made a high here. Notice the momentum is higher. I've actually been looking to possibly short Netflix, haven't done so yet, but nonetheless, you can see right here that if you take a look at Netflix right now, you have 700 is the good resistance area, and you have a lot of support, probably I would say more around 650. If this breaks down under 650, you could at least see a move to the 50-day moving average. And if we get any kind of bigger correction, I think you could possibly get a good move down to about 580 or 600. Of course, if this goes through the highs, never mind, then I would say that this is still a great momentum trade. Now, Zscaler, we've been in forever, and we could finally be seeing some kind of reversal top here, although we saw it here and then it continued to rocket up. This is still having leadership, but look at your momentum here. you did have a mean reversion trade here, even though it continued to go up. So I wouldn't necessarily say I would be a buyer or even a short in this particular area, but nonetheless, this is in that work from home basket. And if we can get any kind of move closer, say to around 295, 300, that was where I would possibly look to re-enter this trade. And if you are long as we are, if we break down under, let's say, that 350 level right here, or 349, 350, probably a good time to take your profits and sit aside. Next one is Marvell Technology. So Marvell Technology also just made a new high. We're getting an inside day. Good leadership here. Again, though, the momentum is sort of showing mean reversion. I would not be buying this up here. If anything, if we get any kind of boost in the rates, now that we know that Powell is going to be the chairperson, although I don't think that's going to happen, but even the perception of yields going up, these stocks, these tech stocks, can actually have a bit of a sell-off. So if anything, I'd be looking more for an active trade to the short side until we corrected to a point that made much more sense, like around 65, 66. Then there's Fortinet. This is another tech stock. This is going more sideways. We had a new high, mean reversion trade, inside day in the sell-off, but we haven't really gone anywhere, although you can see now we're underperforming and the momentum is waning. So I guess what we're really seeing with these even tech work from home stocks is they may have actually played their game at this point, and they could be getting ready for a correction, unless, of course, we see some kind of change in terms of what happens with COVID here. But for right now, what everything is telling us is that work from home is not necessarily so popular as possibly going back to work, which of course would bring a whole bunch of other opportunities that we could talk about at another time. Now, Workday is another one. Look at that's already showing the reflection here of the sentiment I just talked about, sitting right on the moving averages in real motion. So this is critical support against this 50-day moving average. This could actually wind up being a good barometer for the others I just showed you that haven't broken down yet. If this actually breaks down and goes into a caution phase or two closes under that 50-day moving average, that could show you that you're either time for you to take your profits in those other stocks if you're in, or possibly look at a short or buying some puts. And the last one here is VMware, another one in the tech software. So tech software did amazing during the work from home thing. And so now all these predictions of the labor force coming back, I would have poo-pooed. But now that I'm looking at all these charts with you, I'm saying, well, maybe the market is telling us something. So that would be very interesting, bullish for the rest of the stock market, by the way, and some of these areas that have been lagging behind tech. But right now we are under both the 50 and the 200. If we can't get back through 124, this could continue to go lower. You can see your momentum's not so great, and the same thing with your leadership. So again, in conclusion, as we're getting ready all to go home for the holidays, maybe working from home will be less popular in 2022, and we can look at more normalcy in terms of the whole space of areas of people going back to work and then going back on with their lives more and more. You all have a wonderful Thanksgiving. Thank you so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.